This spreadsheet right here, it shows us the anatomy of an up week, the anatomy of a down week, the anatomy of an up month, and the anatomy of a down month. Okay? You have to keep in mind when looking at these that even though it says that there's like a 35% probability that, no, even though it says there's like a 58% probability that during an up week a high is going to get taken, in order to make an up week, you have to take a high. Anyway, these numbers right here, they show us the anatomy of a week, and they show us the anatomy of a month. That way. It's perfect. There we go. So there it is. We have our bull market data, our bear market data, and our null data. Our null data is not showing, and the reason that it's not showing is because I haven't inputted it. So let's go ahead and find out how far the null set goes. I thought it was the shortest one. It is the shortest one. The problem is that I'm not using the null set. And now everything looks great, everything sounds great, everything's fantastic. The problem is, it's fucking broken. So I'm gonna have to revert back to when I did not have my NVIDIA driver. Or, to be honest, this is Linux Mint. And Linux Mint is very friendly with how you can plug things in and pull them out and all that stuff. So I like that. So now it should be the shortest set. Okay. Good, good, good. And no, I'm not trying to count my file names. So E2 to how far does this extend? I think it's a little bit more than 100. I think it's 170. Okay. Okay, and it's going to be A2. There we go. You gotta be shitting me. Is it in the data? No. Okay, so it can be forgiven. Let's just make sure that as I draw it down, it draws them. Okay. So it's fine. It works. This one, I'm actually going to switch to the value 1. There we go. All right, so we're going to make sure that all of these are mutually exclusive. Well, all right. That was a non-issue. I have cats and I have dogs, so sometimes they go at it with each other. So we're going to make sure that all of these sets are mutually exclusive. With LibreOffice, what that means is that if we filter out the zeros and the ones, well, if we select one of these, which we select them by picking the number 1, the other sets should be zeros. They should show us zeros. So that's going to show us that these are mutually exclusive. They do not include each other. Okay. So very important to do. So then we're going to save this in the CSV. These three toggles are very important, very powerful things. And I'm going to close out of that and reopen it really quick. Should be in the weekly stats, right? There we go. So here we are. And then now that we've solidified these numbers, these are actual numbers. They're not going anywhere. They're not doing anything crazy. We're just gonna throw these out. Don't need them anymore. If we do ever need them again, we're just gonna regenerate them. Okay. And we're just gonna take these. Oh shit. We should make room for these. So let's go ahead and make room for these. And we're just gonna grab them. And we're just gonna drag them over. Come on. Here we go. There we go. All right. And then we can delete a whole bunch of these columns. Because honestly, these are obnoxious. I don't like all these columns being here. These are a necessary evil. The reason is because I still need that data here, right? But everything else, all that can go away, right? So now we have all of our filters set up. All right, so then we have to set up our arguments. V2 to V, I think it was like 495, was it? I want to get to the end of the document, the very last 96. There we go. Arguments, I guess. Break more, okay. So that's 31. Okay, awesome, very cool. And this is U3 divided by U1. Please. Oh my god, you gotta be kidding me. This thing just wants to break all the time. Please, thank you. Oh no. And we're gonna make that as a percent. Yes. Yes, sir. All right. So now we have bull market and bear market data that we can pull. And that's going to tell us what kinds of weeks that we're going to end up having. So far, the up months and the down months, they seem very close to the up weeks and the down weeks. As far as the months to the weeks, and the weeks to the days are concerned. It seems like a pretty straightforward way of doing that, you know. It's not really that big of a deal. So to just do it from scratch, and there's a lot of what's the word? There's a lot of like bootstrapping that you have to do, where you need to import the date list, and then you need to put the S&P on top of that, like lay it out on top of the date list, and then you have to it's a little bit of a pain. There's extra steps to making the monthly data work with the weekly data, and making the weekly data work with the daily data and all that stuff. Like with Bitcoin, we had no problems at all. It was very straightforward. We just kind of took the dates, we threw them on, and we processed them, and that's what we ended up doing. With everything else, it's gonna be a pain. I don't want to do it again, but for the stream, I'm gonna end up having to do it again. So that's what we're gonna be doing. So Bitcoin bull markets in a weekly capacity. And by the way, we're gonna do this in the daily capacity as well. We're gonna see what a bull market versus a bear market looks like, and then we're also gonna see what a bull market versus bear market looks like on the what's the word? The daily chart, I guess. I don't think that we're gonna bother taking the bull. No, actually, we might do the bull market. We might look at the bull market in the weekly chart, but I don't even think that we're gonna bother doing the we'll see. We'll see. So let's take our bull market and let's see what's up. We have our total data set, which just copy and paste. And that is 364. That is the vast majority of our data set. Okay. That's more than 3/4. And that's what we're looking at. And once again, we want to see how it takes the highs, takes the lows, how it follows through on both of those, and when it takes both, and when it takes none. Okay. So this is taking the highs. What? Oh, that's fine. Oh, I forgot to clear the filter. Okay. There we go. That's 56% of the time during a bull market. What? I'm gonna do this again. I'm gonna make sure we see what this was. So it's 364. It's the bull market, and then we're gonna see the highs broken. And it's just, if it's a figure I can't believe, that's what I'm doing. That's what I'm looking for. Okay, so yeah, 56% of the time. That's what I did not think. And then closing above the high during a bull market. We'll use this figure right here. Uh, 36%. I'll write that here. And how often does it take a low during a bull market? %. And that's more my speed. That's more something I can understand. And don't worry, these percent ranges, once we get these working, we're going to be able to see what's going on with those. So that's 17% follow through. So that means we have a 32% chance of making, of breaking a low. But we have a 17% chance of moving lower. If we count, well, if we just blindly count, if we just blindly take jumbled up like numbers and we don't even think about anything, right? How about when we take both? This should be single digits, right? Because we're looking at weeks, we're not looking at days. And weeks, they tend to like to make a direction. This is 6%. Or I could be generous and give it 7%. Or take none. And that's just such... No highs and no lows broken. This may be how it wants to consolidate. Because we've seen 18%. That's a lot. Let's make sure that that's right. Okay. And that's 66, right? Okay. So -1 and -1. So these are failing to make a new high and failing to make a new low. We're going to take our bull market number and we're not going to do that. Thank you. We're going to take our bull market number and we're going to re-input that. I expect the same thing to happen, but remember we're collecting the statistics, right? So it does not matter what we believe, it does not matter what we think, it does not matter what's going through our heads. What matters is how the numbers come out. Okay. So then we have our bear markets, and we're almost ready to populate our thing. I almost think that we don't have enough data in the bear market to... Yeah, that's 105 weeks. So we almost don't have enough bear market data to allow us to do anything, okay? But we'll give it a try. We'll let it... Well, we'll see how it goes. So this is saying 40% of the time it takes a high. Low data. I'll even mention in the bear market that it's low data. So I did not mention that in a lot of the others. But we'll see. Uh, 52%. Then it's going to be follow through. Choose a close above in a bear market. There's a few. I don't know. So I'm not confident that this data is very powerful. Let me make sure that this is still working. This is still working. Perfect. Okay. Where were we? We're at, let's just redo this. Because my mind completely blanked right now. This is probably where we were. So that's 17%. And I'm actually going to put a note on that, and I'm going to say that it's low data. All right, anyway, close below in a bear market. Obviously a lot more, still not statistically significant, okay? These would need to be used strategically, and we would need to think of them strategically. We would not be able to just go on autopilot and just be like, this is how we expect it to be, and then we conform the strategy to the stats. We actually have to go away from what these stats are telling us and do strategy, right? And strategy, I don't mean like that like cringe term that people come up with where it's like, you got to do your strategy for your markets, you know? You need your strategy, guys. You need your strategy. You need whatever that strategy is, right? No, that's not what I'm talking about. That's not what I'm thinking about at all. The idea... Shit, man. I'm about to step in something, right? No, the idea is that you have your statistics, and your statistics are supposed to tell you how the mold of a week, a month, a year, a day, all that kinds of stuff is going to turn out, right? And then it's going to be ticking both, right? And then from there, you actually need very little brain power. You're throwing away a lot of brain power. That well, you're reducing the brain power requirement by a very significant amount, and you're reducing the amount of information that you need by a lot by just having these statistics, right? Because guess what's going to happen? The market is going to conform to those statistics. Why? Because it wants to, right? It is just going to do it. The orders of business in the market are going to bring it to conform to these statistics. The reason that these statistics exist and that they show us what we see in this market are because those orders of business exist, right? So really, you're going to be able to catch it. You're going to be able to catch those orders of business without even worrying about it. It's not even going to matter to you, right? So anyway, let's move over to our stat sheet, okay? This is our stat sheet, by the way. So this is for a bull market. Seven, 18. Okay. This is for our bear market. Uh, 52. 32. 9. And 17. So now we can sit here and we can bask in this for one, just a little bit. See that? Very interesting. Very cool, right? Very nice. Very, very nice. Anyway, back to what we're doing. So here's something very important to notice. We also need to have the ratio of up candles to down candles. All right. Using these, we can really tune how we're going to end up having, well, what's that word? Using these, the up candle to down candle ratio, we can tune how we view those bull markets and those bear markets. Okay? So we can see, are there going to be a lot of up candles that are forming those new highs, that are punching through those new highs? Or is it going to be like one or two up candles that just, boom, runs out that high, and then it fizzles, it's done, right? We can ascertain that character. We can figure out what that character is doing just by going through in these stats, which honestly I think I will take. Do I have it open? I don't. I need these three though. I'll grab these three for the daily. We'll go ahead and open the daily. Hello? No? Do we want the CSV or the ODS? Do we not have the ODS open? Let's see if the ODS has everything that we need. And if it does, I would rather run from that one. It does not. All right. Okay. We're going to run the CSV then. That's fine. We're just going to have to set it up again, over and over again. Does that have everything? Up month, down month, up week, down week, weekday. Actually, let me show you what I'm looking at. It's very uninteresting to see. some nothing, right? This one. This is what I'm looking at. I'm trying to see if we have everything that we need. We have the months, we have the weeks, we have the weekday in the month. We have whether or not the high is broken. We have whether or not the low is broken. All right. And we'll just tack on the bear and bull market. We will just tack on the bear and bull markets. This comes from this one, by the way. I'm going to show you. See this one? I've already copied those three rows. And I'm just going to port it over. We're just going to take this over to this one, the daily stats.csv, right? And we're going to plop that in. We're going to make sure that it did all right. Okay, looks good to me. We're going to save it. Yes, sir, save it as the CSV. And really, there's no reason to not be doing a whole lot. Let me make sure that's the monthly data. Do we need monthly data anymore at all? No, right? We're done with it completely. Sure. Why not? We'll save it. So until we start doing our volume analysis, we're not even going to touch the monthly anymore. It's over. It has served its purpose. There's no more reason to have it around. You know what? I know what that looks like. I know what that means. That's gonna be fine. And then also these were for some daily range analysis, which honestly we'll get to that, right? We won't even worry about that right now. So we're gonna eliminate these. We're gonna get rid of these completely, and just kind of delete all that stuff out there. This is gonna be more important for what I'm interested in. We're gonna have equals AM2 count arguments in AM2 to AM 3, 4, 5, 7, and it's going to be 0. And then if I take this and I port this over, excuse me, I move this over, and it should count them. Okay, so that's perfect. That's great. And then this is going to be our percent. AL3 divided by AL1. Hopefully divided by 0 error. That looks all right. Not terrible. 3, 4, 5, 6. That should give me 100%. Okay. Format that as a percent. So it looks good. All right, so now we're set up. Okay. What else am I missing? I feel like I'm missing something off these. I feel like I have this information that I'm looking for right now in somewhere. That's an update manager. It's fine. That doesn't matter. Hey, at least not right now. Anyway. No. This one. So I actually do have that. All right. Well, let me find the follow through then. On the up weeks. Right. And then we're going to do analysis on the days, which I'm not really sure if we have enough data to analyze the days of the week. But we could try. We could definitely give it a try. All right. So back to the daily stats. During those up weeks, where are we? There we are. Drag those over. So these up week candles account for about 55% of the candles, which actually yeah, that falls in line with the weekly data. Okay. But we do need to benchmark our read against these up week candles, right? Okay. The close above. It's going to be this. %. And There's close below follow through as well. Got our up weeks. This is gonna be this. The W. The fuck? No, oh man. Okay. All right. Okay. Okay. And if we start losing data, then I know what happened. There we go. And that's 11%. Cutting it close. I actually don't like having that little data, but that's perfectly fine. There's nothing wrong with it. Divided by 7. Yeah. And then there's going to be the down weeks. Come on. Yeah, that filter. Wait. Hold on. Should be mutually exclusive. Let me check. Okay, perfectly fine. $15.24. It's about 78%. Let me check. Cross reference. Okay, looks fine. Clear that filter. And then clear that filter. Drop that in. 32% follow through. Actually, no, let me check this one more time. Did I use the down weeks properly? So if we close above during a down week, that's 14%, or actually about, yeah, we'll call it 14%. There's a 14% follow through on a down week, right? And the thing is, I would rather use an actual calculator, like a handheld old school calculator to punch these numbers. This one. Yeah. See if it still works. It's fine. Let me charge this really quick. Okay, so I actually love those old school calculators. Like the TI-31s and all that stuff, because they actually use the number that you input. Using this spreadsheet does not use the number that you put in. Right? Using this spreadsheet will actually use a different number, which is a floating point value. Oh. I need more. And the thing with floating point values is they're not consistent. Okay. Let's see how do we end up with, or what did we end up with? By the way, I'm going to bring in exactly what these numbers mean and exactly how to read them for a daily range. Once we're done populating this chart. Yeah, no. You know. Okay. Oof. What is this? So I feel like I've done about all that there is that needs to be done here. Okay. This is a 38%. This is 11%. This is 14%. And this one, I haven't written that down for some reason. Let me just get this number really quick and write it down. You know what I'm doing. You've seen it a million times by now. This is for a down week, right? Yeah. $32.4%. So we'll do it as 32%. Because it doesn't make any difference for us, because we're dividing this into 7 days, right? That's how we're going to start fleshing out for you. Like, personally, I can just look at this and I can be like, oh, wow. It's about 1/3 of the time is, well, I'm going to explain this to you through the calculation. And the calculation will show us numbers which are going to make it very, very clear to you what's going on Monday through Friday. And, well, not Monday through Friday in this case, but in this case, it's actually Sunday through Saturday. Well, actually, no, Monday through Sunday. Monday through Sunday. Monday through Sunday. Because the opens happen on Monday for the Bitcoin. But that's one that I missed. We're gonna need that one, by the way. It will make this abundantly clear what kind of stuff is going on here. Because right now you might just be very confused right now. Right now you might be very confused right now. Of course. If I say right now over and over and over again, you're going to be very confused. $34.56. Although if I put $34.57, it probably wouldn't matter. If we close above, how many times do we close above? Clear that filter. 27%. How many times do we close below? And we're going to do that. Yep. Very cool. This is going to be 20%. Okay. So I'm going to update these for a second. I'm going to go to the bathroom, then we're going to start manipulating numbers. Okay? Does that sound fair enough? There we go. And we're not even looking at Sunday through, we're not even looking at Monday through Sunday yet. We'll get to that. We're going to get to understanding how to pull out what part of the week is going to make the high or the low. And to be honest, just listen to Alberts. Alberts tells you how to eyeball it. Whenever he says, "Oh, it's 90% of the time it makes a low," and by the what was it, the 18th 5-minute candle of an open, I would say he's full of it. But at the same time, he wants to instill confidence in you. The actual figure is more like about 70. Is it about 70%? Maybe 70, 80%. And if you've ever played XCOM on the hardest difficulty exposes you to the real statistics. And playing the hardest difficulty with an 80% success rate, it's gonna piss you off. Like you're gonna be mad. So that's probably what Al Brooks is doing there, telling us that it's 90% or 70% or 60%, stuff like that. He doesn't really mean that the probability is really what it is. Let me save this 1 second. All right, so I'm back. Thank you for your patience, all 0 of you. Love you guys. Every single none of you. So anyway, here's what we're doing. I don't wanna. I don't wanna do this. All right. Let me get up. Let me get that calculator that has been charging in the windowsill. And let's do some math, shall we? All right. Where do we want to start? Do we want to start at the bottom or do we want to start at the top? Let me just stretch real quick. All right, so let's do our average number of our days, then our average number of our weeks, and we're not going to be doing our average number of our months because we don't have a large enough pool. Oh, also, this one had low data, right? Yeah, this one had low data. There we go. We should probably do this in 10-point font. Yeah, so this is average days and weeks. Yeah. That's what I've been trying to do this entire time. Okay. So this is the average number of days and the average number of weeks that this is going to take for this chart to move higher or move lower depending on this period, right? So there's obviously we're obviously working from the proportion down to the specific days that we're going to be focusing on, and we're actually going to use we're actually going to use the statistics for the days in particular to find out. Yeah, well, that's what I'm trying to say. We're actually going to use the statistics for the specific days to find out which ones to white glove and really get into. So that's what we're doing right now. Let me tie my shoe really quick. How did that get untied? Comfy shoe. Probably because I was wearing them like slippers. That's probably why. I was like, ooh, how did those shoes I never tied get untied? Oh. I know. I am retarded. Certifiably. 80% of us can't read. Yeah, you're in the 80%. All right, so this table right here, this is the one that we're actually going to need, and we're going to go ahead and use this. So it's 48 divided by 7. I'm sorry. 7 divided by 4. Oof. 7 times 0.48, because that's a percentage. Okay. And that's going to be 3.4 actually. Don't worry, we're going to reconcile the actual 0.4, right? That's going to be cool. And then there's going to be 7 times 0.27. Okay. 1.9. We're probably just gonna round those up, by the way. Clear that memory. Seven times 0.47. 3.3. Seven times, this is the follow through. 2, 1.4. So we're going to see an average of 1 day of follow through out of every single week for the downside. Fascinating. Absolutely incredible. How often do we take both, though? Both sides of the market. 12%? Which is 0.12 in this calculator. 0.8. Interesting. And then 17%. Uh, 1.2. Okay. Uh, 58 times 7. 0.58 times 7, I believe. Four. Okay. 0.58 times, or 0.38 times 7. 2.6. Or we'll do 2.7. Okay. Actually, no. We're going to say average weeks. We'll say take both. I'm fixing this, by the way. Okay. This is gonna be take low. Damn it. Okay. So the thing is, you can actually do this in the spreadsheet. You can make it very, very fast. The only thing is, I was doing this off the cuff, number one. But number two, and more importantly, I don't want to fall into those. I don't want to end up dealing with those floating point errors, if that makes any sense. So this is going to be 0.37 times 7, 2.6. Okay. Okay, so this is going to be 0.8. Is it? Follow through is 11%. Yeah. So 0.8% of the week. Or no, I'm sorry, 0.8 of the days, right? And then for taking both, we're going to take a look at the up weeks. 0.12 times 7. This is also going to be 0.8 up weeks for taking both during an up week. And the average days for taking none, 0.17. That's actually going to be 0.16. It's going to be damn near 0.8, by the way. So pretty much the same. 1.1. Oh fuck. Okay. Sure. Fine. And the thing is, as we see these little decimals, those are telling us that there could be more days or there could be less days. But we're not really going to expect, for the most part, that we're not going to expect that there's going to be more than that. Right? So 2.7, I'm not going to expect more than 3 unless I have a reason to. Okay? So for a down week, we're going to do the same workup. Times 7. 2.45. So we're just going to call that 2.5. Because remember, it's not like we can get a 2.5, like 2.5 out of 7 days are going to break a high. That's not never going to happen, right? Completely impossible. The closest that we can get is a failed new high, and that's still a new high, right? So this is going to be 1. Okay. times 7 is going to be 4.8. Okay. Wow. That's actually a lot. 4.8 for down weeks. 4.8 days out of 7. I mean, are you fucking kidding me? That's 5 days out of 7 most of the time that we're moving down. Isn't that crazy? Let's see, where were we? So we were here. So we're at the follow through, right? Which one was the follow through? 0.32, right? 0.32. And by the way, these are all percentages. These values up here are all percentages. So how you're going to calculate how many days you're going to expect is you're going to take this number, you're going to put a point in front of it. So like, see how this one is 18%? If I'm going to calculate this number, actually, let's go ahead and come down here where it's supposed to be. And we're going to do the actual calculation of the spreadsheet. I do the equal sign. That shows that it's trying to do an operation. And I'm actually going to show this. So that's 18%, right? Here's how you're going to write it. 0.18. Okay? That's the same as 18%. Okay? And then you're going to do times 7, which is 7 days of the week. And it's going to give you your number. Okay? So it put a comma there. I apologize for that. There we go. So 0.18 times 7 is how you're going to write that for this 18%, because that's 18% of the time it's happening, and it's happening. We're measuring days, right? So that means that these days are, yeah, well, so because it's a percent, because it's lower than 100, if it's 100, you're going to write that as 1 point, whatever it is. Because it's lower than 100, it's going to be 0 point, whatever it is, right? So 18% is 0.18, right? And then times 7, because it's daily. If you're using the S&P, it would be times 5. And that's a typical number of days. It's more like it's 4.8 days is the average for the S&P, and that's just because it's so many damn holidays. But Bitcoin trades 24/7, makes math easy, right? So 0.18. I don't like it doing math for me, by the way. I want to minimize the amount of math that it's doing for me. So I don't mean to sound angry. I'm not really. As I throw my pencil around, I know, right? No. So we have our follow through at 32%, and we're gonna put that. I'm going to put into my calculator 0.32 times 7, and that's going to give me 2.24, which I'm going to round up to 2.2, and that's what we're going to use for this calculation. Okay. And is this starting to make sense? You're starting to see that 4 days during an up week, 4 days out of the week are going to be up days, right? They're going to take out highs. 2 to 3 days out of the week, it's going to stay above the high that it takes out. 2 to 3 days out of the week, it's going to take out a low. And 0 to 1 days, it's going to actually move and stay below that low. And 0 to 1 days, it's going to stay, it's going to take out both sides of the marketplace. And one day, I'm talking about this one, by the way. So that's 4 days out of the week it's going to be taking out a high. 2 to 3, it'll move higher. 2 to 3, it's going to actually take out a low. 1 or 0, it's going to move lower. 1 or 0, it's going to take both sides of the marketplace. And 1 time, it's going to do nothing, right? It's going to be an inside day. Okay? So that's what this workup is showing us right now, right? It's showing us the ratios of the days from where we can start. Once we understand these ratios of the days, we can just apply them to the charts as a template. Don't have to worry about them ever again. They will serve us 100%. They'll be completely reliable. No, they won't be, but they will be extremely reliable fallbacks, and they will take a lot of the guesswork out of what we're doing. No, I'm sorry. They won't take guesswork out of it. They will allow us to substitute a lot of the knowledge and a lot of the insider information that we would normally need to navigate these markets properly, and it would allow us to substitute that for educated guessing, right? Because these are very good educated guesses. That's what the whole point of statistics, right? Statistics is not a real branch of math. Statistics is how you can approximate things that you are really too complicated for you to fully understand it in a reasonable way. And so you just approximate them, and you get answers that are good enough, right? So that's also the point of what we're doing here. Also for the weeks, we're gonna use. Should we use 4 weeks or 5 weeks in a month? Let me check my calendar right here. 1, 2, 3, 4, and that's for a 31-day month. We're gonna use 4. Or we could use 4.5. 4.25. I think it averages out into 4 more. Man, Dodgy is this guy is like ripping up all these like degenerate, stupid, lunatic people. Well, I'm glad that people are watching my fucking video at least. Anyway, where was I? I was checking my stream to make sure that it's still running, and then I was checking on OBS to make sure that it wasn't fucking up. Okay, so OBS seems fine. Our stream is fine. We're good to go. So average days that we take both sides of the market. Let's see. Uh, 0.28, right? Times 7. That's going to be 1.9. I will write it as 1.9. It could also be written as 2. We'll write it as 2. All right, because it's actually 1.96. It's on the fence. Sometimes, especially when we're doing these statistical analyses, I like to round it up or round it down. depending on context. I don't, if it's on the fence, if it's like for example, that 0.96 that we had just now, the correct way to round this, 0.96. I'll give you a visual aid. So the correct way to round 0.95 or above is to use to round up, right? We had 0.96, but I felt like maybe, just maybe, it was a little bit disingenuous to say that there was going to be a chance of 2 days out of the week, taking both sides of the marketplace. Although, well, I mean, yeah, well, like, it depends on the context. Like, for example, the thing that we're talking about, the thing that we're doing, 0.96, it feels more like a 0.9 than a 1.0. But at the same time, the correct way to do that in math is to round it up. Let's cancel that. Sure. There you go. I'm just gonna use the delete button for these because that's much easier, right? So, where is this? What were we doing? The last one, yes. 0.18 times 7 is 1.2. But we'll do 1.3, actually. Just to round correctly, because it was 1.26. Okay. And I'll just do these, so that way we can keep things moving along, you know? Seven, 2.3. Point 0.42. 0.442. 0.42. 2.9. 2.9. And that's 0.16. 1.1. And then taking both sides of the market. Taking no sides of the market. 1.1. Okay. So then we're actually going to backtest this. And when we backtest this, it's basically going to be going through the charts and, well, actually we don't need to backtest this. The math already backtested this for us. But basically the point of backtesting, especially for something like this, is to get used to what the stats look like in a chart. Because at this point, you're going to know intellectually, right? Like in your mind, how or what to expect out of a week, but you're not going to know how the week actually plays out, right? 2.8. That's good. Uh, 1.4. $3.7. Okay. And then there's going to be 13. Fox 13. It's a follow through, right? Yeah, it's a follow through. So it's 0.26. 1.8. And then 0.13. 0.9. Last one, 0.18. 1.2. There we go. And then we can actually do another column there. Just to make it a little bit easier to visualize this. So I don't know if we're going to use 4 or 4.25. We can use 4. I don't think it's going to kill us. I love it. What this motherfucker used to say that fair value guys were his favorite. The hell is Laws doing? Do you know what the PD arrays do? They help you frame risk very tight. And in fact, they don't even increase your probability. If you were to play out with your PD arrays the whole time, you would get very, very impressive looking trades. Some very, very impressive looking trades, but you won't get a ton of them. If you understand what you're doing, you can use them to frame very exciting risk management, very good risk management. Let me make sure I'm still running, by the way. Excellent connection, excellent, love it. Anyway, what was this? What was I doing? Should we use 4 or 4.5 or 4.25? I don't know. What's 31 divided by 4? That's 365 divided by 12. Divided by 12. That gives us the months. Divide that by 7. Yeah, so it says 4.3. Oh man. 4.35. Or 4.34. 4.34. Okay, so fuck. I'm gonna put this in bold, by the way. So it's like an old school, like when they would like bold everything, and it'd be really awesome. There we go. So we're just gonna do this out with the calculator. 35. 2.2 or 2.3. We'll just do 2.2. Uh, 1.4. Follow through. That's actually a very, very large follow through rate. Wow. Well, it's actually about the same as the daily follow through, wasn't it? So if you have no bias, you can have this expectation of a week. And you're gonna win if you have that expectation of a week. 0.37. Because we just did the 0.32, right? Okay, so it's 1.6. Uh, 0.21. Uh, 0.9. So it's going to be a 0.9. And then average weeks to take both. That's 7%. That was actually a very low data one. However, we're still going to use it. 0.07 times 4.35 is going to be 0.3. And then it's the 18. Uh, 0.7. Actually, we'll call that 0.8 because it's so close to 0.8. It's actually 0.783 is what it is. 0.67 times Yeah, 4.35. It's a fucking constant. I should know that. 2.9. Okay, so this is for up weeks. Sometimes it's 2 weeks, sometimes it's 3 weeks. Okay. For taking a high, for moving higher, we have 0.67. No, 47. I apologize. 47 times 4.35 is 2. Okay. And then we have, for taking a low, is it this one? Yeah. So that's 0.9. Technically a 1, but we'll call it a 0.9. It's actually 0.957. And then for moving lower, that's for a follow through. So that's 0.11 times 4.35. And that's 0.4. We'll call this 1.5. Okay. So that's 0.4785, which is 0.5. I'll call it 0.5. Last one, 0.06. It's not 60%, it's 6%. So it's 0.06 is how you calculate that. A lot of people, they're going to get screwed up trying to calculate that, and they're going to call it 0.6. It's 0.06. The reason is if you have one digit, it's like the first digit is a 0. Okay? So like points. So this is 60%. Okay, 0.6. This is 6%. Okay? So that's why I did what I did. Okay? So to take both, 0.06 times 4.35, yeah. 0.2, we'll call that 0.2. To take none, times 0.45, 4.35 is 0.7. Okay. Point 0.32 is 1.4. 0.12 4.35, right? Is 0.5. Okay. Uh, 0.56. Is 2.4. Okay. So already we're switching from favoring the highs to the lows. We're not favoring the lows nearly as strongly as far as the probabilities are concerned, but we are favoring the lows a lot more strongly than we were when we were looking at when it's on up. during the up month, we were favoring the highs a lot more strongly. During the down month, we were favoring the lows a lot more strongly. So it's 2.4. Sometimes it's 2 months, sometimes it's 3 months. Typically, you're going to expect 2 months of up movement. No, typically you'll expect 3 months of up movement for an up month. That's what the 2.9 means. For the 2.4, typically you'll expect 2 months of down movement during a down month. So that's what that means. And then there's a bull market. Oh, let me fix this. There we go. So, oh, let me specify that because this is very important. Bold that. Yes. Average weeks to move lower is going to be 0.33, right? Times 4.35 is going to be a 1.4. Okay. To take both is times 0.9, 0.09. It's going to be 0.4. And to take nothing is going to be 20%. Okay, so it's going to be 0.9. It's really 0.87. I guess that's why my finger went right there. But yeah, there we have it. We can also do bull markets daily and bear markets daily and see if that does anything. Because if we can have a bull, dude, if we can have bull markets, give us an edge, like a crazy edge. Yeah, we're gonna add that. We're totally gonna add that 100%. We'll add bull markets and bear markets to our daily. So yeah. Okay, so that's gonna be 2.4. Okay. Wow, that's actually a lot. 2.4. Not really. Not really. It's not a lot. It's not too much anyway. Really, we're seeing a lot of confluence between what the daily and the weekly is doing. The weekly, I feel like it's a statistical. It's the fact that it's 1/7 of the data that the daily is, and that's the reason that we're not lining up perfectly. But yeah. So to move higher, by the way, we are going to add that that column, the bull market and bear market. This is 2.4. .36. times 4.35 is 1.5. Could call it 1.6. It's 1.56. But remember, I'm not comfortable rounding up those numbers. I want to give it a little bit of a buffer. You know what? It's not that bad. I'll call it 1.6. It's not that big of a deal. So to move lower, it's going to be 0.32 times 4.35. That's 1.4. No, to make a low. Yeah, that's it. And then to move lower, it's 1.7. Or actually, no, it's 0.17 times 4.35. And that's going to make 0.7. Okay. Average weeks to take both. That's going to be 0.7. 0.07 times 4.35. That's going to be 0.3. Average weeks to take none. That's going to be 0.18. And that's going to be 0.8. There we go. Four times 4.35 is 1.7. So that what that means is that sometimes, well, obviously, if you've seen how a daily or weekly ranges, they're never perfect. Okay. And obviously, you're not going to have a 1.7%. It's like, that's the 0.7. You're not going to be like, oh, that's the 0.7. But that's not how you use this data, right? How you're going to use this data. That's not how this data is used, okay? How are you going to use this data? Damn, now I sound like a crazy person. Because I started talking about how to use this data. And then I trailed off and lost my train of thought. Let me finish this, then I'll go to the bathroom, and we'll add the bull and the bear market onto the daily charts as well. I feel like we're going to get a more granular idea of what to expect from a bullish or a bearish condition. So this is 0.17 times 4.35 is going to be 0.7, right? And then after we take a low, it's going to be 0.5, 0.52 is 2.3, okay? And then the average weeks to move lower, it's going to be 0.32. Yeah. Times 4.35 is 1.2. Not 1.2, 1.4. 1.4. That's what we end up with. And then average weeks to take both sides of the marketplace. That's going to be 0.09 times 0.5. 0.5. 4.35. Okay. And that's going to be 0.4. Okay. And then taking none is going to be 0.17 times 4.35 is going to be 0.7. Okay. So I'm going to write this out. bold this, the BRB, and make it 80-point font. Okay, I'm back and I'm ready to take care of this very last column. So we're going to insert some new columns. All right. This is 10 font, right? Yeah, 10 point. Let's go. Hey, look, pay attention. Okay. This is gonna be. Let's save this. By the way, let's fucking save this. Yeah, I've been working way too much on this file to not have it saved. I can't believe I've done all of that without hitting save. Yeah. Okay. And then we're going to try to whittle it down. See which days we want to be. Look at the marketplace. And figuring out what's up. Oh, my back. Oh, my back. My beautiful back. Oof. All right. This is going to be our bear market. This one's going to be our... No, this one's going to be our bull market. Because we started with the up and down, right? So we're going to keep that theme. And this one's going to be the bear market. There you go. Perfect. It's got a few pixels. Yes, it's got a few pixels loose. Yeah, that's true. Pixels, loose pixels. What the hell? What am I talking to? What am I telling to myself? Loose pixels? Well, it seems like people are interested in seeing my shit on Twitter. Looks like you. All right. I don't want to. I don't want to. I don't want to. All right. So here's what we're going to do. We're going to switch over to the daily data. Let me make sure that that's the right one. All right. So this one's the right one. We're going to take a bull market. Gonna make it very easy. Okay. For now, we're not even gonna worry about the 72%, right? These two are weekly, by the way. There we go. It's the daily that I care about. Uh, 2557. There we go. So this is during a bull market. It's taking the high. Follow through. Take low. Follow through. And then we have both and none. I'm still writing this down by hand, by the way. Bear market. We take our highs. We have our follow through. Take low. Follow through. We have taking both. And taking none. Okay. All right. So this is the highs. Okay. This is what's happening during a bull market. That's at 50%. Let me make sure. Okay. Because I wanted to make sure that I'd done that on the weekly and not the daily. So this is a 50%. This is our follow through, close above, right? In a bull market. We'll call that 30. Then we'll say close below. or low broken. There it is. We'll call that 45. Close under. And this could be 18%. Taking both sides of the market. That was my calculator, by the way. I was just setting it to the side, so that way I'm able to deal with this. Both sides broken. And the bull market. Uh, 12%. And no sides. It's going to be take that off, right? And as far as the high, that'll do. Copy that. Clear this filter. Clear this filter. Clear. It's cleared. Yep. It's going to be 16%. I will call it 16%, by the way. I know it's technically 17. It's not going to make much of a difference. If we find that it does, if we find that we have to round up, we'll just, or if we find that we have to round, we'll just round up, okay? When we do that last step, remember? That last step, 730, okay. Low data. I don't know, actually, we'll see. We'll see if we end up with low data sets. Bear market closing a high. Not closing a high, but breaking a high. Okay. $43. Okay, so we have 43%. Let me make sure we're still streaming. It appears that we are. Fantastic, perfect, perfect, perfect. Where was I? Bear market. Yes, sir. Okay, so this was not particularly low data, but I want to be on the watch for low data conditions that can emerge in this market in particular. So, because we have 730 data sets, I don't like that. Where were we? The 43%. Okay, we took the 43%. Close above during a bear market. Okay. Clear that filter. Clear that filter. 20. I'll actually call that 22%. It's quite high. How about a low broken during a bear market? again, the bull and the bear markets, we can find those through fundamental means. Okay. That's going to be 51%. And because we can find them fundamentally, we don't really have to worry about the probabilities so much. We still have to worry about whether or not they're going to actually merge in the marketplace. I know, 26%. Wait, 26% follow through on the lows? Oh, that checks out. Never mind. We're good. We'll check it again anyway, actually. It's very, very, very important that we get this correct. Because when we end up with that final number at the end, it's going to be very difficult to it's going to be a pain in the ass to use that number if it's not correct, right? Not no data. This one. So the low and the high. We're going to drop that in there. Yoink. Ooh, 107. That's going to be, I'm going to call it 15%. Just because we're low data. And ticking none. So we're actually going to go in here, take that off, put on the -1, and we're going to tick our bear market. And that's going to be 20% dead. All right, so now we can import that. Let's go ahead and import this these values, okay? So this, I'm gonna change this over into a the better one, the one that saves the format, and we're actually gonna move back over to our little spreadsheet here that we have. So almost done, okay? So we have 50%, 30, 45, 18, 12, and 16, okay? For our bear market, we have 43, 22, 51, 26, 15, and 20. Said 20. Thank you. All right. So now we're going to do up our math really quick. It's going to be perfectly fine. Don't worry about that. Okay. I don't know why my numbers are so perfect. Okay, this one. Times 3.2. Okay. And it's going to be 18. Uh, 1.3. 12. 0.8. 0.8 or 0.9? Call it 0.9. Uh, 1.1. There we go. Actually, no, we were generous with that one. So 0.8. There we go. No, 0.9. Because we were not generous until we went over to the bear market. Which the bull market has very nice numbers. The bear market not so much. Times 7. That's gonna be 3.22. 1.5. 0.51. Uh, 3.6. 0.26 times 7, 1.8, and 0.15 times 7 is 1. 0.2 times 7 is 1.4. Okay, so there's our probability spread. Pretty decent, if I do not say so myself. Or rather, if I do say so myself, this pretty much shows us this pretty much shows us how many times out of the week or how many weeks out of the month that we should expect up days and down days, and moving higher versus consolidation. So there we have it. And I had something else that I was going to do. Breaking it down by the day of the week is going to be a lot more complicated. And I think that I think it's a lot easier to just do it practically in the chart than it is to try to be doing it in your statistics. What else? I feel like I'm missing something. But I'll go ahead and save that to make sure it doesn't fall apart. Yeah, it's good. Okay, so I'm gonna do a couple of more things to see if I can lean out this chart a little bit more without sacrificing the statistical edge. We're gonna take the bull market up days. I'm sorry, up months, which is gonna be 0. There it is. I know I was looking for it. And I was like, where is it? I don't know where it is. No. So we'll see how many data pieces that is. Ooh. 232. That's going to be a small data set. So I don't think it's worth it. We'll do it for the bull market. Because I know we did it for the up and down weeks themselves. And a down month versus an up month, it's a lot easier to spot than a down week versus an up week. Although, at the same time, let's just do it on the side, all right? Okay. And then I'll see what the down weeks versus the up weeks looks like. Okay. Bull market up weeks. I'm sorry. Yeah, well, I'll look at the bull market up weeks. Yeah. No, this is gonna be up months. Yeah. Up months. There we go. And it's gonna be 232, right? Take both and take none. Okay, so that's fine. That'll be fine. Let me set my calculator aside. Slide in there. Delete this. Ooh, almost slipped up my chair. We're gonna pick bull market for the highs broken. I feel like this is really gonna whittle this down. I do not want this whittled down too far. 159, that's actually great. What the hell, 68%, okay. That's pretty good. How is the regular bull market stat? The regular bull market stat is a little bit anemic compared to this. So this is practically 70% for an up month. And I feel like that can be modified to be a down month, right? We can buy that. Okay. No. We're still inside of here, right? Okay. Which one are we using? The one that says 20%. Okay. Not the month. It's gonna be a huh? Just had to make sure for a second. During a bull market. There we go. And we're gonna take that. %76%. That's higher than the other one. Let's take this one. Let's get rid of down months. Let's do this in the bull market. Copy this. Let's clear these. It says 76%. I don't believe that's true. These are daily stats, right? No. No close above. Just high broken. We're gonna say it's gonna be bullish. A bull market. And it's gonna be an up month. So we're gonna yoink that. And that should be okay. So that's why. I'm picking a bull market. And I'm picking an up month. So we have those filters. Drop that in, 1639. Yeah, that's why. So we're going to see if we can get the right math out of this, by the way. So 50% of bull market instances and 43% of bear market instances are going to make 80% or 48% of total instances, right? Interesting. It's an interesting observation. What is this? I've been using a weekly. Okay. I was using the weekly the whole time. That's why I was having trouble with the numbers. Shit, man. Okay. And that's also why I got 68% in the weekly chart. Because that's the number that we had over here in the weekly chart. Okay. Yeah. I'm sorry, I'm ready. Ugh. Either way, now we have to deal with our mistake. Okay. So with the high broken, hopefully this is just going to confirm what the weekly is already saying. Okay, 55%. Wow. Okay. Very interesting. So it seems to not make that much of a difference. Okay. Wow, that's really cool. All right, let's take a look at this. So remember I said 55%? That's what I just said. Look at the statistics that we have right now on board. We have 48%, 58%, 35%, 54%, 41%, 50%, 43%, right? So it looks like the bull markets, the daily, during the up weeks, during the bull markets, the up weeks, they don't really change that much. Okay. So it's very, very interesting. I'll do the rest of it to see if it's worth putting on the chart. If it's not worth putting on the chart, I just won't do it. I know. Low broken. What? I don't believe so. I don't believe that's bull market during an up month, right? It's a little broken. Copy this, and we're going to paste it. %41%, that's much better. Okay. So now I know doing these statistics by hand, it actually sucks a lot. But at the same time, let's say I close above. Then, by the way, we're going to do %34. And then we're going to do a close below. It's an up month. And we close below. %15. And then we need both sides of the market. There's a high and a low broken, and it's a bull market in an up month. Okay. Copy this. Paste it. 12%. So far, it's looking pretty normal. Very interesting. It looks like it evens out, right? It looks like we're gonna say -1. We're gonna say -1. Go. Yeah, it looks like we have more or less an even number of candles. 16%, yeah. So this is very similar. By the way, oh man, I didn't switch over. I didn't switch over to show you the action. My apologies. I'm sorry about that. Either way, wow. Just looking at the strict up month, it looks like we came up with the same answers. Okay. 54, 34. In this case, it's 42. It was 41 before. Now it's 16, 12, and 16, right? Those are the answers that we came up with for the up month. So it appears as if any up month and any down month is going to be the same in a bull or a bear market. So it's like a modular plug and play piece of thing. Let's see what else. How else can we how else can we analyze this? We could save this. Yeah, there we go. What else can we do? Is there anyone in the chat to ask? No? Not really. I'm trying very hard to think. I mean, we can do out the days of the week, but that's just kind of stupid. It's possible. It's doable. But to be honest, I don't think that we have enough data. All right. Well, I think that we've done enough. I think I'll stop this here. I'll leave this somewhere. I will leave this on my Twitter. So if you're on Twitter and you see this, you're gonna know where it's from, hopefully. I'm gonna spruce it up just a little bit. In fact, let me spruce this up right now, just to make it look more professional. All right. And yes, I will be doing this for every single one. There we are. So for the next one, I'm just gonna, I'm not gonna do this part. Fuck. And actually, I'm gonna go down and I will fix the accuracy of the ones that I fucked up. There it is. Professional, right? All right. So now we're going through the table. 20%, looks good. And then we're going to find the next one. Down month daily. 20%. Yep. This one I remember was 50 and 30. Yep. Bear market daily. It takes none 20% of the time. So that's good. I think that's good anyway. Did I add any zeros to this one? No, I added the zeros to this one. Total weekly. 7%, yep. 0.07. Up month weekly. 6%, yep. Down month weekly. 9% and 20%, yep. Then bull market weekly. We have a 7%. And bear market weekly, we have a 9%. So it looks good. All right. So this is the completed spreadsheet. I'm going to go ahead and share this. Meanwhile, thank you for your time. Have a pleasant evening. Hope you enjoyed. Like and subscribe. And if you enjoyed this kind of content, go ahead and you can donate on the PayPal in my description for my channel, or you can just like and subscribe. Are we back? Are we back? Or is the connection still happening? Hello? I'm gonna wait to hear from myself in this stream. Okay, I will redo the outro since I'll be able to edit out the rest of this stuff and there's nobody watching. So, if you enjoy this kind of content, feel free to donate in the PayPal and my channel description. If not, I will also accept likes and subscribes. And comment below. Tell me how you liked it. Tell me if I can improve on it. Please, if you think it's too long, it's as long as it is. The cut down version is what you see right here as this worksheet. So is what it is. So anyway, thank you for your time and good night.